Good morning, traders. This is your game plan for Tuesday, April 22nd. We've got the market trapped in a range. That range was established by this long green candle 2 weeks ago, and we're trapped right smack dab in the middle of it. Yesterday, we had a pretty decent round of selling, or so it appeared early in the day. Seemed very fabricated to me. We had this gap down. There was negative news, but it was Trump is going to fire the Fed chairman. Okay, big deal. There's comments coming out left and right about that. There's nothing concrete, but this was more of a buyer's boycott. We had European markets closed, so there wasn't as much activity early in the day. When you get a gap down, gap and goes are always more dangerous for us to try and trade from a risk reward standpoint because the bounce can fill. When you get a steep initial move like that, you almost always get a nice tall bounce out of it, and that will present a better shorting opportunity for you. So I was waiting for the bounce. I never got short. But the good news is I was actually short S&P futures from last week, so I was able to participate in this move, but I did take profits when I was satisfied with those gains. I didn't catch the remainder of this move because I continuously looked for this decent bounce, and we never got it through the course of the day. So this is just buyers not being interested at all until the last hour of the day. And you'll see these nice stacked green candles on heavy volume. Look at that real relative volume coming in late in the day. That was a major tell. And then what happened overnight, this first blue line is where the S&P futures are going to open today. So we've got another nice gap higher. What's the most likely scenario today? I feel that the market is going to have a difficult time reaching this second blue line, which is the high from yesterday. It doesn't look like much, but this is 45 S&P points. So the fact that the market would open higher and grind its way up to this resistance level and blow through it, not very likely. There also wasn't a lot of overnight bullish news to make that kind of a move. So I believe what we're going to see is this gap up and a gradual leak lower to test the bid. Why do I think that that's the most likely scenario? Because we saw heavy selling pressure yesterday. Not heavy, but we did see steady selling pressure early in the day. So those sellers are not just going to walk away. On a gap up like this, they're going to test the bid and see if they can fill in some of this gap. When the market starts to retrace and it starts to pull back, we want to see a wimpy move lower. Mixed overlapping candles on light volume. That tells us that buyers are still in there supporting the market. Not to a great degree because sellers still have the upper hand, but when that initial wimpy little pullback runs its course, we want to see most of this gap preserved, and then we want to see support up in this area. And once we have that support, the market should be able to recover from that and grind higher. So fade the first move of the day if it is wimpy and look for trades on the other side. The market's been volatile. Buyers and sellers are engaged. There's no reason for us to feel that we're going to get a big sustained directional move. We did yesterday because market participation was relatively low, but there's major news pending this week. Big time earnings releases. We've got Google and Tesla this week. That's going to give us some insight into the tech sector. Buyers and sellers are waiting for this news. Next week, we've got major economic releases with GDP. We have the unemployment report. We've got tons of earnings announcements. And the week after that, we've got the FOMC. We do have a lot of Fed speak right now, but Powell last week basically said, higher for longer. We're happy right where we are. So the FOMC, I don't think is going to be a big market driver, but certainly earnings reports and corporate guidance are going to be very important. I think the economic numbers are going to be pretty decent because not strong, but stable. And that's going to support the market. The fear and the sell-off right now has been related to what are the tariffs going to be? Is this going to crash the economy? Is this going to spark inflation? We don't know. We don't even know what the tariffs are going to be yet. And there are trade deals being discussed right now. Could those possibly be a bullish catalyst for the market? Sure. Could the budget deal be a bullish catalyst for the market? Sure. So we're trapped in this range. Let's not take any big bets. Let's see how the news plays out, and then let's wait for that reaction, and then we'll be able to find higher probability trading setups. That's exactly what institutions are doing right now. That's what we should be doing. So I'm still selling naked, out of the money puts on very strong stocks. I'm taking advantage of this very high option implied volatility. It's really a neutral strategy, very high odds trading strategy. I did sell some HTZ puts yesterday, the 4.5s. I got 20 cents for them. It's going to yield about 9% over the course of the next 3 weeks. I'm happy with that kind of a return. Those are the types of plays that you should be focusing on for your swing trades, for your day trading. Wait for that wimpy first move today and fade it. That will be your first best opportunity of the day. I'm not looking for sustained directional movement either way, because there's too much news pending. That's how I would structure my trading today. We will see you tomorrow. I'll do a little bit longer video. I'll include a new pick, and we will see you then. Trade well. Please subscribe to the YouTube channel and turn on your notifications so that you don't miss any of these updates. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.